Info Edge is one of the first companies to bet on India's digital boom. Starting operations in 1995 with Naukri.com, it has added marquee portals like Zomato and 99acres.com to its kitty over the years. While some of these are already market leaders in their respective spaces, it does leave a little room for growth, especially in such a hyper-competitive market. So what's Info Edge's strategy going forward? Let's ask Hitesh Oberoi, the MD and CEO of the company. Hitesh, thanks very much for taking out the time and speaking with us. While we probably will take a look at your quarterly performance as well, but the main idea is to take a look into the next few quarters and probably the growth strategy of the company down the line and where you intend to focus all your energies on to make sure that growth is sustainable.
Yeah, so Info Edge is basically two different sort of companies in some sense. We have an operating business, under Info Edge we run Naukri.com, 99acres, Jeevansathi and Shiksha. These are businesses we own and manage 100%. And then we have an investment sort of arm where we have been investing in startups outside for many years. For example, we own a large chunk of Zomato, we own a small chunk of Policybazaar, and we have maybe 10 or 12 other investments in startups outside. So the strategy of the company is very clear, to sort of get to clear leadership in all the categories we operate and run ourselves, like Naukri, 99acres, Jeevansathi and Shiksha. And of course to sort of maximize returns from our investment portfolio over time. So Naukri is our main business. 70% of our revenue, almost all our profits come from Naukri, and these profits are being plowed back, one, into growing the Naukri business, two, into growing the 99acres business where we are a clear leader today, three, getting growth back in Jeevansathi and Shiksha, and also sort of these funds are also being used to invest outside in startups. Right? And as the economy recovers, as sort of employment picks up, as real estate picks up, we expect all these sort of businesses to do well going forward.
Let's talk about revenue targets that you have for each of these platforms. Whether it be Naukri, whether it be 99acres. I mean, this quarter was a little bit disappointing on the revenue side. And what your big grand plans for Zomato are to take it to, the numero uno position?
Yes, you see, the Naukri and 99acres business are very closely indexed to what happens in the economy. The job market was tight for a few years. IT companies are not hiring till a few quarters ago. But the last 2 quarters have now been pretty good for Naukri. Collection growth has been up 17–18%. Billing growth last quarter was upwards of 26% in jobs. IT companies are back to hiring once again. So in the near term, if IT companies continue to hire and the economy continues to grow at 7–7.5%, we expect the Naukri business to sort of chug along nicely with these kind of growth rates. But like I said, a lot depends on the economy. If things slow down because of the elections or because of high inflation or anything else that happens, or if IT hiring slows down for some reason because of what happens in the US, we don't know what will happen. But if the environment continues to be benign, then Naukri should jug along nicely in the 15–20% sort of range. As far as 99acres is concerned, the real estate market was very tight for the last few years. Demonetization, RERA, GST, projects not being completed on time, all these things had a big impact on the market. There was a lot of unsold inventory. Even today, builders, many builders are going bankrupt. They're short of cash. They're not able to complete projects. Having said that, despite all these, for the last 2 quarters, we've grown our business at about 35–40% in 99acres. In fact, billing growth last quarter was close to 50%. If the interest rate environment continues to be benign, if builders are not starved of funds, and if prices stay steady, which is what they've been for the last few years, we expect at least the growth in the real estate sort of business to also be strong. But things change pretty rapidly in India. One can't be sure. So one has to wait and watch and see what happens. As far as Jeevansathi is concerned, our focus is more on growing volumes at this point in time. We're not a clear leader in this category. We're a number 3 player. We're a strong number 2 in the north. But our focus right now is to gain share, and especially volume share, so that we can get the network effect going in all our businesses. So here we are focused more on sort of the long-term health of the business and less on actually profitability and growth targets at this point in time. Shiksha is a small business doing well, breaking even, generating about $7-8 million a year. So these are the internal businesses we have, and these are the broad targets for them. As far as Zomato is concerned, it's a very competitive market. Zomato is sort of a very, very strong player in the restaurant reviews and ratings business. They have a very strong product in the form of Zomato sort of Gold, which is doing very well in the market. Some of their international operations are chugging along nicely. Some are under a bit of pressure. On the food delivery side, food ordering and food delivery side, they've done a fantastic job over the last few quarters. Literally from nowhere, they're now sort of almost as big as the other player in the market. Yes, the company is losing a lot of money, but it's growing rapidly. So let's see how this plays out over time.
15-20% growth in Naukri, 35% in 99acres. I'm sorry if you missed out Zomato. Could you give me a ballpark that you expect Zomato to grow by?
Actually, very hard to predict what's going to happen in Zomato because, you know, the growth is crazy actually. So it's very hard to say what's going to happen. Maybe the business will double, triple, quadruple, who knows. I mean, a lot will depend on how much sort of funding is available, what the competitive intensity is like, and how many new products they launch and sort of how fast they scale up. Literally from a few thousand delivery boys, literally from a few thousand, they now I think have 70,000 or so. And all this has happened in the last year or two. So you know, it's very hard to predict what growth is going to be like in Zomato. It's growing rapidly month on month is all I can say.
Hitesh, let's talk about the here and now. Good quarter on the revenues front, but margin pressures out there in order to ward off competition. Would these pressures stay?
Yeah, so we are committed to the long-term health of the business. We don't really look at margins from on a quarter-on-quarter basis. We are investing aggressively in product development. We are investing aggressively in new areas like machine learning, artificial intelligence, to improve the user experience on our platforms. We are launching new products in jobs. We also sort of want to ensure that our brand stays strong, so we've upped our investment in marketing and branding. So this is what is required at this stage to sort of build a strong business in the long run. So this means a temporary dip in margins, so be it. On the other hand, if we continue to grow strongly on the top line front, I mean, margins may not be impacted to that extent, but that we will have to wait and see what happens.
Which is a fair point, Hitesh, but just wondering that do you reckon that an average for FY19 could be sub 35-34%, or maybe around close to 31-32%, which you logged in Q2?
Yeah, so we will continue to invest strongly in marketing and branding. We will continue to invest strongly in product development, technology and research. So our costs are going to go up for sure. Now, what the margins we will end up with will be a function of what kind of revenue we're able to generate, over the next 2 quarters. So if revenue growth looks up, margins may not come under that much pressure. But if revenue growth continues to be like it was in the first half of the year, then certainly we will end the year with lower margins.
Interesting. Is competition looking like it will keep players and leaders like you on tenterhooks as well, and therefore need for more advertisements, not just over the next couple of quarters, but over the next 18 odd months? I mean, surely you're looking far out for the next 3, 4, 5 years. Does it look like the competitive intensity is picked up so much that it'll keep you under check on the competitive pressures for the near future?
Well, actually, yes and no. See, what's happening out there is that the competition from the players we were competing with earlier is no longer very strong, right? But the nature of the internet is such that you get new players from time to time, players which could be disruptive potentially if you don't sort of keep your eye on the ball. So we need to watch out for such sort of players. Also, what is happening now is that the number of people on the internet is growing, right? So it was, from 100 to 200 million people a few years ago. We're talking about 300, 400 million people. So therefore, the opportunity to sort of grow faster is also there today, right? But the truth about the internet is that companies like ours, especially which are marketplaces, we need to invest in product, technology, brand. We can't capitalize these investments. These investments are operational in nature, so we sort of charge them off every time we make them. So these need to be made upfront for the future, right? In the hope that these will result in sort of new areas of growth and faster growth going forward. So that's really the hope right now. We are banking on the fact that there are new opportunities, and that if we invest right now, then over the next 3 or 4 years, irrespective of competition, we will grow faster. But let's see what happens.
Just one last question, Hitesh, before we let you go. From a shareholder perspective, where is the next leap of growth for Info Edge? Where does it come from?
Like I mentioned earlier, we are, Naukri continues to be a cash cow, and we are sort of hoping that we can continue to grow Naukri fast, and Naukri will therefore keep generating a lot of cash. And this cash will be used to fuel growth in the other categories which we are sort of present in, like 99acres, very large market potentially, was a tight market for many years, but growth is slowly coming back. We are a leader, but not as dominant as we are in Naukri. So this is an area of investment for us, and this can actually get us a lot of growth going forward if we do a good job. Matrimony, there is scope for us to sort of improve our performance in the long run. And then our investments outside, so Zomato and Policybazaar have done very well over the last few years in terms of valuations. And we are now investing aggressively in new startups as well. So that will also sort of get us, maybe growth over a period of time.
Leave it at that, Hitesh. Thank you so much for taking the time out and joining us, and all the best for the quarters ahead.
M&A, there will be M&A opportunities.
Sorry, please make your point.
Thank you. The last point I was making was that we expect some M&A opportunities to also arise over the next few years. There is nothing that we're looking at specifically at this point in time, but if there are opportunities, then we will grab those opportunities as well.
I'm sure you do that, and maybe the cash on the books also helps. But Hitesh, take a moment to thank you again for joining in, and all the best for the quarters ahead.